Hey guys, Doug the retirement guy here. We're doing a review on BDCs. So we want to see what's going on in the BDC market, see if there's any potential out there. And we found this OFS Capital Corporation common stock from OFS Capital Corporation paying a 16.03% dividend yield. We did our research and we wanted to share it with you. I think this is something we should all be looking at. First off, what are BDCs and what's the advantages of being in a BDC? Well, the first thing is the high yields. So BDCs are regulated investment corporations. They must distribute 90% of their profits to shareholders. So they don't pay corporate tax on profits before they're distributing them to shareholders. So there's a lot of advantages for the company and for you. And we really set this up as these are large dividends for a long-term investment. Next, it's open to retail investors. BDC exposes investors to the debt and equity investment markets that you probably won't be able to get into in other ways. Most of them are typically closed off to retail investors, and that's why BDCs are always open. Liquidity, the BDCs are traded on the public exchange. So you got the transparency, you got everything to someone watching if they're making good, bad, or different investments. And then this is the one I think I like. I'll say the best. I like the 90% distribution for sure, but it's diversity, really diversity, is that you can buy a BDC in all different forms. So if you want somebody who's investing in manufacturing, you want to invest in uh, fitness companies, you want to invest in areas, you can definitely find BDCs that are investing into portfolios that you would like to be involved into. It just takes some time and some energy to do the research and find out who's who. But the nice thing about this is it gives you a different returns than bonds or stocks, and it's really based off of interest. So OFS, the Capital Corporation, they engage in direct lending to the middle market companies, offering flexible capital solutions. And they do some unique things with different senior secured loans, um, really get into where they own equity in certain items to get the loans. The 16.11% distribution rate, very strong. And the neat thing I like about it is their payout ratio is only 60%. So they're still got 40% of their money sitting back and basically reinvesting it. Now I know they said they got to pay 90% of their profits, but they also have money that they can take and invest. So they're able to cover that distribution for a long period of time. So I looked into what is their portfolio, and it was really unique as when I got on the phone and was able to talk to them, that we were able to find out that they really are looking between revenues between 15 to $300 million. So these are some decent sized companies that are out there. The EBITDA is $5 to $50 million, and enterprise values between 10 and 500 million. So these are not your small little operations, but they need help to continue to grow. I looked at some of their portfolios, and they had probably 30, 40 different portfolios out there of different companies that they're working with and all different things. And I just grabbed a few top ones here. Planet Fitness, very, very strong. Honor Health Network, so they're into the healthcare area. They're into the fitness area. They're into the safe security. They're into that side. They're into the Melbar. That's one I looked into. I'm like, some of these companies I don't know about, but they're into aviation. And then you got trucking up double A transfers. So why OFSS? Well, first off, main thing is that 16% interest or dividend payout. I was impressed with that, and I always liked that the payout ratio was I call it low, is 60%. But the other thing is that they offer, for past years, they have grown their dividends. So this is someone that they've set up that they have a set process. They're going to continue to grow their dividends over time. Plus, when I looked at their stock value, year to date, they're already up 6.33%, even with the March and April struggles that we've seen. So again, very, very solid, good growth of a stock value, good growth of a dividend value, and a high dividend already. So it's like a triple. It's a hit, and doing solid. Now, the downfall to it, as you know from this channel, we like monthly dividend payouts. This one's built on a quarterly dividend payout. Now, dividend payouts, are normally nice for reinvestment potential, the regular cash flow, but you're going to get it every quarter. And something I tell people, hey, you can live with this in a retirement account. You just have to be a little better organized. What you need to do is find out which quarter they're going to pay and build around that. So if you have one that pays in, January, April, okay, that's a January and April count. Then you're going to look to find one that's February and May. So you just put it in there, and then all of a sudden you're going to see yourself that you've built yourself a monthly income with about 12 different stocks or ETFs. So we take a look at the 1 year bar chart of how this thing goes, and right off the bat I was like, wow, this thing is really up, it's down, it's up and down. But if you look at the side right off the bat, and I'll show you another screen here shortly, is you're really bouncing between $2 a share, from basically $9.50 to $7.50 is that bottom line. And then when you really look into it, you're really only looking at about $1.50 bounce around. So it has some spikes, it has some lowers, but realistically, this thing's fairly steady. 1 month out, they're 1.98% positive, 6 months, 5.4. And that's really impressive because when you look at what has happened in the past 6 months, you got a couple of bad times with March and April in there. Year to date, 6.33. And then 1 year was the one stickler. If this came out, I'd be ecstatic and it would be a home run and we'd be all set. But down 11% in the first year. But over 5 years, they're up 73%. So it's kind of one of these things is it looks good, things sound good, but what happened in that 1 year? Now we look at the dividend chart that we come back from this. And you can see that they, like I told you, from basically 2020, they have steadily grown their dividend all the way up now to 34 cents per quarter. So it's a steady growth across the board. And when we take this thing out even farther, as you can see, we've gone 10 years out. They're just getting back to their original number of 34 cents after the 2020, which would have been the pandemic area that they dropped off, and they're recovering back from that point. So again, I would tell you this is almost a 10-year dividend type program to where they're sitting. So what we've always done is we do a calculator in some of these that we take 12 months back. So on 5/10 of 2024, the stock was $9.62. We would have been able to buy 1,039 shares with only $10,000. We go a year out, it's dropped to $8.49. Right here's that 1 year deal, 11% down. So everything computerized, matched out. You lost $1,179. And where did they lose it? Realistically, they dropped off in July of last year is when they started to take their little bit of a hit. And then they came back to recover. After basically November, they've been on a tear to recovering back to some serious numbers. So we understand where it was at, and now that they're recovering, what do we want to do from here? So we take a look at their dividend, their 12 months dividend of 34 cents a piece. We got to 14.14%, or $1,400. For 12 months, we would have had a profit of $233, counting on the dividends, paying the difference back. So it's a positive, nice dividend return, But I'm looking at this saying, okay, you got to buy this one particularly right. You can't just jump in or just expect to be, boom, we're into this and now it's going to be profitable. So you got to buy when it's right. And I think this is why we're doing a video, because I think the timing is fairly strong right now to be a right time. So we do a chart, and again, you see this one where I tell you, when we dial it into a tighter realm of a chart, you see that it's fairly smooth month over month. You don't see any real big drops. You don't see any big mountains that we're climbing up to. It's staying right in that solid price point. The 52-week average is $8.56. Current price $8.49. So we're basically 0.82% below average. So there is an opportunity still to buy into this fund and buy into this BDC. Yeah, I'm going to say, yeah, you're going to have a growth to it about 1% to get back to average. So you're not going to. I don't think you're going to lose if you're into it now. You're not really going to lose like you're seeing the 11% drop off, but you're not going to see big growths either. Now, the one thing that we did find from some different analysts is that they did do a target price on this that puts us at $9.20, which is a 7.7% increase. So realistically, we could be looking at a 7 to 8% growth over the next 6 to 8 months. So I'm looking at this saying some real big positives is we can get some growth out of the fund, but we haven't even talked. We look at a nice 16% dividend back, some very strong numbers. So what we show you here is what we actually have bought into. So this is something for down the road that we would have, but in October, we actually bought in thinking we were right at the rock bottom. And of course, you can never hit rock bottom. We bought at $8.14, which was able to buy us 1,228 shares. Now, we did have a drop off the following month, but we've recovered. So we're showing you in 7 months that we've been able to get 4.24% dividend, or excuse me, stock return. And that's because I'm saying we're buying at the proper times. The dividend so far, we've only gotten 2 dividends out of it, but we've gotten $835 or 8.35%. So we should get to that 16, realistically a 16% return off of the investment that we've made, which is exactly what we're looking for. So in 7 months, adding in the dividend and the stock return, we've come back with a 12.59% return. So again, a very strong total package when you bought it right. So we put this as a moderate buy, and is it good for a retirement account? We think definitely it is. A 16.7% dividend, everything shows that it's going to be right on line with that number. So that's a very, very strong number to have. And then we show a 4.24% gain in 7 months with a possible 7% above that even. So we could possibly see that the complete switch over to a 11% gain from 11% loss. But again, I strictly put this as you have to buy right. And buying right is buying under that 52-week average, which so is buying anything under $8.56. So I think that's where we got to be with this one. And it's something out there. If you're looking for some dividend money, you're definitely going to have it. So guys, this is Doug the Retirement Guy. If you like what we're doing, give us that thumbs up. We're doing all kinds of BDCs and we're doing some monthly payouts. So don't miss any of our videos. Hit that subscribe button. And if you like what we're doing, give us a comment. And if you don't like what they're doing, give us a comment. We're open to everything. Guys, all we're doing is trying to help grow the channel so we can help grow your wallet down the road.